Welcome to the Bar Down Investing Show. Hey there, everybody. I am Jay Scott. I'm your co-host of the Bar Down Investing Show, and I am here all by myself this week, but just for the introduction. So my co-host, Kyle Wilson, or maybe I'm his co-host, he joins me on this episode, but he's not here for the intro. If you remember from last week, we had a really fun episode where we did our 2023 predictions for the economy, the housing market, economic data. Well, in this episode, we continue those predictions where we talk a little bit more about some economic data, and then we go into some fun predictions. Don't know what I mean? Well, you will after this episode. This is a fun one. Find out some of our non-economic and non-market predictions for 2023. Everybody, Happy New Year. Thanks for tuning in. And without any further ado, let's jump back into our predictions.
Welcome to the Bar Down Investing Show. Here are your hosts, Kyle Wilson and Jay Scott.
Commercial rates will, if you want to talk about fixed rates, they'll mimic that a little bit. If as far as adjustable rates, as they say, we usually call them floating rates. They'll obviously mimic the Fed funds rate a little bit more. But it'll be the same kind of idea. So people like to talk about the relationship between mortgage rates and cap rates. So where do you think cap rates are going to end up next year?
It's hard to throw numbers around here because for anybody familiar with cap rates, they're very location specific, they're asset class specific, they're condition specific. Even in the multifamily world, you can find places where cap rates are probably still 4.5%, 4.75%, and other places where they're 6 or 7 or 7.5%. Likewise, if you go from multifamily to self-storage, you can probably see rates transition from an average of 5 or 5.5% to an average of 8 or 9%. And then when you start looking at different condition of housing and age of housing, things change it. So it's hard to kind of pinpoint like a number for cap rates. But I guess the bigger question is directionally, where do we see things headed? Do we think cap rates are going to increase, in which case we're likely to think that values are going to decrease, or do we think cap rates are going to decrease, in which case we're likely to think that values are going to increase? And for me, we've seen about, what would you say, about a half point in cap rate expansion kind of across the board?
20%. I'd say about 20%. Yeah.
Okay. And so I don't think we're done. I think we're going to see a little bit more volatility in valuations. I don't think that we're going to see, again, I don't think there's going to be like a 2008 type event where we see, and in fact, it's funny. Let's talk about 2008. When we look back at 2008 in the multifamily space, and I was not in multifamily, but I've looked at the data. A lot of what we saw was it wasn't like residential where prices just collapsed because things were selling at a lot lower value. What happened in 2008 with multifamily in a lot of places was transaction volume just stopped. People weren't buying, people weren't selling because buyers and sellers were so far off they couldn't come to an agreement. Certainly there was some fire sales, and there were some people that couldn't refinance and had to sell their properties off at a huge discount. But for the most part, transaction volume just kind of fell off a cliff. And I think we're going to see the same thing. I think we are seeing the same thing now, and I think we'll continue seeing the same thing into 2023, where we just see a lot fewer sales than what we've seen over the last couple of years. And I think at the end of the day, that's going to drive prices down. It's going to drive cap rates up, just because the sales that we do see are going to be the desperation sales from sellers that are in a bad spot. But I don't think it's going to be like a wholesale industry collapse or a wholesale industry decrease in values or increase in cap rates. I think it'll just be a few sales here and there that are impacting overall average values. So yeah, I think cap rates will go up a little bit. I think we're probably more than halfway to where they're going to be. So who knows if we're 20% down in values, maybe we go down another 10%. Maybe we see another quarter point in average cap rate expansion. So yeah, I think values will go down a little bit, but I don't think it's going to be a rock your world type situation where people that are hoping to get these deals at pennies on the dollar, I don't think we're going to see those.
Yeah, I'm. There's a lot to unpack there with what you all went through, but I agree for the most part. The big difference, so there's a couple big differences between now and back in the previous, Great Recession, 2008. Um, First is one of the main issues or one of the things that caused the biggest problems was the lack of debt available for people. When there was a problem, even if you found a good deal, you couldn't find anyone to finance it for you. Um, People's even their lines of credit were called. Liquidity basically just dried up overnight. So that was a major issue. Versus now, if you'll look back to 2020 when COVID hit, yes, the bridge lenders and the debt funds, they kind of stepped out of the market, but Fannie and Freddie just stood fast and they backstopped everything. We got a deal done March 2020, and Freddie financed us at 75 LTV. Now we had to put extra reserves. You do all these different stuff, but they were there to backstop us when things went wrong. So there's that factor, and also back in 2008, there was no syndicators. We didn't have that the Reg Ds or any of that stuff, bringing money into the market, and syndicators, shops like us, we could be a little bit more creative buying deals, and if it doesn't fit our standard cookie cutter criteria, then we could shift our criteria. Versus the major institutional players, the REITs and all that stuff, they kind of, if it doesn't fit their box, they're just gonna make an offer on the next one. So I think that's a huge factor. And I don't when you say going up from here, it was 20% significant. Like we saw a drop of, if you want to take one market that we're in as an example, like everything was traded for 3.5, and now I'd say it's about 4.25. Like that's significant as far as a change in the cap rate.
Yeah, but
So
at the same time, and I apologize for interrupting, but I'm curious your thoughts here. Like, I kind of look at that 20% as things going back to normal valuations, like basically the irrational exuberance kind of dissolving and prices kind of going back to where you should have expected them to be if people were actually paying on true NOI.
I guess the point that I'm getting at is interest rates right now are about 6 as far as if for commercial rates for fixed. And we're still seeing things trade in the fours as far as cap rates. So the whole philosophy that we can't, the cap rate can never be lower than the interest rate. I think that's already been disproven. Um, the one the one thing that you have to take into consideration is rent growth, right? So we had the last couple of years, a lot of what propped up all of these crazy interest or crazy cap rates is rent growth. We were seeing double digit rent growth. Well, we've already seen that drop significantly to even zero. If you take a month over a month, we had maybe a month or two of negative rent growth. Um, so the question is, do you think that's going to persist? If we see rent growth persist as a zero negative rate, then yes, we're going to see significant cap rate changes. But pending that, it was kind of more of a bit of a hangover from the massive rent growth from the previous years and going into the winter months. If we get back to normal rent growth, I see us leveling off at kind of where we are right now at the end of the year. So the 3.5 up to 4.25. I think 4.25 is easy by the end of the year to stay at. And to your point, maybe we'll sneak up another quarter point. But I think the biggest factor you have to take into consideration is transactions aren't getting done right now because of the volatility, because the unknown. Banks don't like to lend during volatility, and people don't like to underwrite deals during volatility. Once we see a Fed pivot or a Fed um, even just stopping their rate hikes, then banks will get a little bit more comfortable. Underwriters will get a little bit more comfortable. and the demand will come back into the market. And once that demand comes in, then the cap rates will stabilize at that point. And I don't, that 5.25 that's predicted in what, 4 months. So I think 4 months were stable, and so that lends to the keeping both flat, maybe up a quarter point by the end of the year, in my opinion.
Yeah, I think an interesting way to think about this is we normally think that cap rates drive prices and values. So for those that aren't really familiar with how commercial real estate works, you've got this formula, which is the value equals the income that the property is producing divided by the cap rate of that particular market for that particular property. And a lot of us like to think that income is basically going to be whatever income is. You don't play with income, but if cap rates go up, then values go down. If cap rates go down, values go up. And so we tend to think, okay, if values are changing, it's because cap rates are changing. Technically, that's true. I mean, cap rates are tied to value. But the more nuanced way to think about this is that it really is the income that is changing for a lot of these deals. And I don't mean that a property is making less income or more income, but typically at sale, the buyer and the seller have to kind of agree on what is that income that we're taking and we're applying a cap rate to get a value. And typically what we see is that the buyer wants to take the income that the property is making today and evaluate the value of the property based on that income. The seller wants to take the income that the property could potentially make tomorrow, at least in our value add space where a lot of us reside. They want to say, hey, tomorrow after you do these renovations, the income is going to be this, and the value should be based on that. And typically we fall somewhere in the middle. And over the last couple of years, we've kind of fallen towards everybody's happy to agree that they're going to take the seller's income expectations for a year from now after some renovations been done. And now over the last 6 or 8 months, we've kind of fallen back to that. Okay, no, the income is whatever the income is today. And so I think a lot of it isn't so much cap rates changing, but and again, cap rates obviously do change. These are all related. But at the end of the day, I think it's sellers are finally capitulating and saying, okay, the value of my property really is what the income is today. And so it's a lower number than what it was a year ago, even though the property income hasn't actually changed. And so we're seeing lower valuations. And so with that different income number and a different valuation, the cap rate has to change. And I don't know if that made any sense, but long story short, I think it's not necessarily that values are changing because people are really concerned about values going up or down. It's more that they're negotiating for these things differently.
Yes, you're right that right now there's a huge disconnect between sellers and buyers and what the pricing should be. But I think that right now the biggest issue and the reason that cap rates went up so quickly is that buyers the only transactions that are happening are sellers that have to sell. Us personally, with such a small transaction volume, you get brokers calling you left and right. Hey, do you want to sell your property? And we are always in the market of making a great return for our investors. So we monthly have a number that, okay, this would be a number that would be a great return for our investors. And so if a broker contacts us, we'll say, okay, yeah, we would sell any property for the right price, and this is the price. But no one's going to pay that price in this kind of market. So we just keep throwing that price out. And eventually, if someone takes it, then the market comes back, then they'll take it. But to that point, the only people who are actually selling are the ones who absolutely have to sell. And that's what you call like a true buyer's market. And so it's hard for me to believe that's going to get worse, I guess is a good way of putting it. Because the only people who are buying is if, okay, I'm only buying this if this is a really good deal, because I don't know what the market's going to look like in a year. I don't know what's going to happen with inflation. I don't know what's going to happen with rent growth. I don't know what's going to happen with cap rates. So I have to project out. I have to expand all of those things. I got to expand cap rates to 5%. I have to expand, or I have to bring rent growth down to 2%. I have to do all these things because I don't know, and all of those things bring the price down. And I think once those things kind of level off a little bit, then we're going to see cap rates level off as well.
Yeah, and it also goes to, I remember 5 years ago when I started working with you and Ashley in this business, and you talk about the value of a property based on the income it produces, and it was always what's the income that the property generated the last 12 months? What are the trailing 12 months of income average per
Right.
month? And that is how you get a value. And as of like 6, 8, 10 months ago, income was changing so quickly that sellers were saying, no, we're not going to take the last 12 months of value to set a price. We're going to take the last month of value. Like we're the
Right.
last month of income. What did the property produce last month? And we're going to assume that over the next 12 months, it's going to be that good, even though that month was higher than any month in the last 10 years. And they would set that value. And I think now we're back to like 3 months. We look at 3 months
Yeah.
income. And so I think what we're going to start to see over the next several months is that we're going to head back to that. Okay, income is truly what's the last 12 months look like, or at some point we'll stabilize to that. But everybody again is going to have to kind of agree on what's that. How far back do you look, and how far forward do you have to look to figure out what you want to use as an income number? And until we all agree on that, there's going to be a lot of disagreement on values.
Yeah, it was baseline's always kind of been 3 months just because banks use 3 months. Banks always want to see that T3 to make sure that that's stable. But you always looked at the 12 months, and as long as the 12 months saw kind of a steady up progression, then you were willing to look at this T3. If you were seeing, okay, you know, T12, the average income is higher than that T3, then you're having issues and you're taking a T12. But yeah, I think I see it more normalizing to your point, that it comes more standard to, okay, let's look at the T3 compared to the T12 because we're not seeing the rapid rent growth that we're seeing anymore, and that's going to drive more towards the pricing.
Yep.
So we talked a bunch there about prices for commercial because pricing and cap rates are kind of hand in hand. What do you see for residential house prices? Do you see them? We saw a pretty huge run up during COVID, and we've seen, I think we reported there was 3 months in a row where the pricing has actually been down. So where do you see 2023 for residential house prices?
Yeah, so I mean, I've talked over the years about the fact that house prices rarely drop. You look at the last 150 years worth of data, and typically prices go up. Certainly, they go down a little bit here and there. 2008 was kind of one of those few and far between events where we saw housing prices drop considerably. I think what we're seeing today in some markets, we could see, and again, I don't think we're going to have a 2008 type event, but historically, to see housing prices drop more than 2 or 3%, even during a recession, was pretty uncommon. I think with the run up that we saw, with the affordability issues that we're seeing, with a potential recession on the horizon, I think we could see a drop in housing values, a continued drop in housing values. Now, I think it's going to be more concentrated in specific markets. We saw some markets that just absolutely went nuts over the last 2 or 3 years. And I think those markets are at the highest risk of seeing a drop in values. We've also seen some crazy population trends over the last couple of years, people moving from certain states to other states, people moving out of cities during COVID to more suburban areas. It'll be interesting to see how population trends play out over the next year or two, because that's certainly going to factor in as well. People start moving back to cities, especially if the values start to drop and people see an opportunity to get into reasonable housing at reasonable prices in places like LA and New York City and Seattle and San Francisco. Are people going to be willing to move back to the city that they didn't want to live in during COVID? So I think we're going to see things relatively even out. I think it's going to be a flat market for the most part in 2023, but I think there will be some areas, some local markets that could take a hit. Some markets could take a really big hit if they're unlucky enough to have taken a big run up and now they're seeing population decline just because of population trends. But overall, I'm going to say housing is going to be down 5% across the board in 2023, with some areas faring better and some areas faring much worse.
Yeah, I think that's a pretty safe prediction. I don't see, a lot of people are calling for massive pricing changes. I don't see us getting into double digits. Um, I think 5 to 8% is pretty safe. And to your point, it's going to change depending on the area. Somewhere like some areas, California, Phoenix, things like that, where you saw massive, huge 20+% changes. You might see a bigger correction just because of the bigger swing up. But places in the Northeast where we didn't see as much of a swing on the uptick, I don't think we're going to see as much or even any downswing. It's also going to change based off of the pricing point. Your starter homes, it's I can't see the pricing of those taking much of a hit. You're always going to have people who are wanting to buy their first house and they've been saving up, and they're the fact that there's been swings in the housing market isn't going to change them. What's going to change is the supply and demand, kind of in that middle portion where people moving up or moving down in the status. Somebody who bought a house and got a 3% interest rate, they're obviously not going to be looking to sell anytime soon and give up that 3% interest rate and change into a 6.5 for the same sized house. So that's gonna curtail supply quite a bit, but it works both ways. It also hits demand, but people can't afford as big a house, so maybe they're going to wait to upgrade, or they're going to wait to jump out of the rental market and get in. So I I I agree that we're going to see a bit of a shift, but maybe a little bit higher than what you're saying. Yeah, it's not going to be that significant. We're not going to be on the 2008 level.
I'm going to put you down for 8% drop then.
I said 5 days. Okay, let's split the difference. Let's go 6.5.
6.5 it is.
I didn't know you were going to hold me to that one too.
So I haven't yet told you what the winner and losers get and have to endure. So
Oh, geez.
we'll talk about that.
What did we
We'll
what
talk
did we
about
do
that
last time where you had to there was that thing where if you ever had a goal that you were trying to go towards and you didn't hit it, you had to donate to something that you hate. I forget what they if you don't hit your goals, then you have to donate to somebody who's against puppies or something. But
Yeah,
well, we could put that. You did that for weight loss then. So what's
yeah.
your that's a good question. What do we think Jay's weight is going to be at the end of 2023?
Oh, that's a tough one. Okay, so
You don't have to give your actual weight. You could just say an up or down.
No, hey! Accountability. Okay, let's talk about my weight. Well, we're getting into the more esoteric ones, but I'm okay with this. So I have been as high as 215 pounds. I'm 5'10". I've been as high as 215 pounds about a year and a half ago. I've been as low as about 185 probably about a year ago, and now I'm at 205. So I've fluctuated a lot in the last year and a half, and it sucks. I'm gonna let
You're a whiplash curve.
it's been a tough year and a half, and I have no excuse except that I'm undisciplined and lazy, and so that's not an excuse. That's just the reality, and I have to change that. So let's hear your prediction for me, knowing I'm at 205 right now.
I thought you were going to predict yourself to hold yourself accountable, but 205 right now, and you said your low was 185.
Yep.
Um, I think you'll have a good year. I think you'll be down. I think you end the year. We have to do the end of December because December is usually a tough month.
Hey, that's my problem,
So
not yours.
I think you'll get down close to your low, but then you'll tick back up and you'll end in the 192.5.
Okay. It's funny. I'm thinking I'm going to be a little bit more aggressive. I decided whatever you said, I was going to be a little bit more aggressive. I'm going to go for back down to my low at 185.
That's where you'll end.
That's where I'm going to end 2023.
And no holiday bump after that, huh?
I guess I'm going to have to be lower than that if I'm going to sustain the.
Yeah, you'll have to get to 185 so that by New Year's you'll be All right, you're down to 180. So by New Year's it'll be 185.
There you go.
All right, lock it in. Write it down, Jay. I want
That's
to. I don't know where you're writing this down, but
I'm trust me, I'm writing it down.
well, we've been real serious here. Let's keep rolling with the fun predictions. Who do you think will win the Super Bowl? Who are you calling?
I'm not a football fan. So fun fact about me, I grew up in Baltimore in the 70s when the Colts left. Colts left town in the middle of the night. For those that don't know the story, basically, the owner of the Colts packed up the team, didn't tell anybody, and then in the middle of the night left town and moved to Indianapolis. And literally, it wasn't until the next morning people woke up and realized the Colts were gone. So I grew up pretty much without a football team until the Ravens came, but I was already out of Baltimore by the time the Ravens came. So I'm not a football fan. Um,
You're pretty close to Tampa right now, though, aren't you?
I am. The problem is I have no idea what's going on, and I could pick a team right now that's like not even in contention. So I'm gonna
Well,
go.
you could stick with the Bucks. The Bucks look like they're gonna, even though they're 7-8, I think they're gonna make the playoffs because they're still the division leaders. And you get Tom Brady in the playoffs, you never know. So you could pick your local team.
Okay, I'm gonna let you go first. I already know who you're gonna pick, but while
Well,
you're doing
obviously,
that, um,
you're gonna look up standings.
yep, and then I'm gonna go from there.
Well, obviously the Eagles are winning. They're the most dominant team in the league. Even when they don't have their quarterback, who's the MVP of the league, they still should have beaten Dallas, who is arguably the next best team in the league. No one could stop them. Eagles all the way. It's not even going to be a contest.
Okay.
On the spot, Jay.
Who are the Eagles' biggest competitor, arch nemesis that still
If
has a
you
shot?
if you pick Dallas right now, we are going to have issues.
Oh, look at that! So Dallas is in the same conference, two
Same
games,
division.
same division, 2 games behind. I can't. I'm not a Cowboys fan though. I'm gonna. I
That's
used to
good.
live. I used to live in Northern California. I'm going with the 49ers.
There you go. That's a good pick. Like you get Mahomes is just so good. I have him in my fantasy league, and he's taking me. I'm in actually. If we would have done wins this week, I'm in the fantasy finals. And Mahomes is my quarterback, so I can't complain about you picking him. He's pretty good.
So there you go. Philadelphia for you and San Francisco for me.
That'd be a good bet if you want to put a bet on that one.
Okay.
What other fun stuff can we bet on? What about Chat GPT? You think it's going to take over Google?
So
We used it to write our entire intro, which we still have up right now.
yes. So for those that don't know, I mean, you're probably familiar with ChatGPT or OpenAI, the company. And there was an article that came out last week that apparently some senior execs at Google are freaking out that this thing could be the next Google. So for those that don't know, OpenAI, um, run by a guy named, well, by a bunch of guys, but basically they're aligned heavily with Microsoft. There's a lot of reason to believe that Microsoft may try and turn this into a search engine that competes with Google, and it sounds like Google's a little bit concerned about this. And so I think that this is going to not lose steam. This idea of AI technology, I think we're going to hear a whole lot more about it in 2023, whether it's ChatGPT or some other product. But I wouldn't be surprised if Microsoft were to come out or somebody were to come out with a search engine that ends up being, if not a competitor, at least scary for Google. So yeah, I think that's a reasonable prediction for 2023.
Yeah, I mean, the question is that how quickly can this get implemented? Because it's obviously on Google's radar that this is an issue, and Google's got a lot of money, a lot of R&D, and they are already the overwhelming largest player in the search engine marketplace. So I mean, yes, ChatGPT is really cool. And if you're looking to get a single result, the best single result, kind of like the Google I'm feeling lucky, then ChatGPT is probably right now even the better option. But there's still that dynamic of when you Google something, just scrolling through every single one of the results and things. And I don't know, is Bing even still around?
No
I don't
idea.
know. I don't know if Microsoft has put a lot of work into the Bing, but so I think Google has enough of a head start that they'll figure something out, and they're pretty good at course correcting and uh, coming out on top. So I think it'll be a great fire to light on the industry, but I think Google will still hold out.
Well, the CEO of OpenAI is a guy named Sam Altman, and I think if you haven't heard his name, I think his name's going to become pretty household in 2023. He's going to be one of those people that you hear a lot about. And so, whether or not this becomes the product or not, I think AI is going to be a big topic of discussion in 2023.
Okay. Do you want to? So we got time for maybe one more. Do you want to do politics?
Just one more? We're just starting to get into the fun stuff.
Well, what else do you want to talk about?
Um, I need to know, where do you think The Rock's going to be in 2023? How many movies? How many scandals? I mean, we need some Rock predictions, right?
Now the Rock he's going to stick to his standard movies for a little while here. He went out on a limb with his Black Adam. I'm sure he's got a couple in the hopper right now that are just his standard smoldering self. He's going to stick to that for 2023. He's going to keep it simple for a little while. And then he'll run for president in 2024. No, no, that's not a prediction. I would love it though, because that's well. Here's a good since we like to do like would you rather's and never ever's and stuff. Who would you pick if aliens landed on the Earth next week, and you had to pick one person on Earth to be the ambassador for all of Earth? Who would you pick? And I'm obviously, spoiler alert, I'm picking The Rock.
Who would I pick? That's a tough one. Um,
Because that could be a prediction for 2023. A lot of people are saying aliens are coming.
Aliens are coming. I'm gonna think. Can I think about that one for a couple minutes?
You got to think about that. Well,
I
I wanted you to think out loud, but that's fine.
Okay, so let me think out loud. First, I think it
Here,
needs to
I'll tell you why I picked The Rock, and you can lead off that. So first of all, The Rock's a big guy, and if we want to have the intimidation factor of what the human race is capable of, someone like The Rock, he's he's very big in stature, and he's intimidating. So if they don't necessarily come in peace, he'd be a good pick for that. And the second option is he's so good at saying the right thing and turning situations like he just never messes up, and when he does, he handles it so gracefully. I think he would be a great negotiator that way, and I don't think there would be a lot of pushback across the world. There's not a lot of people that would say, I hate The Rock. So I think it would be an easy selection.
think it's got to be a woman. I think it's got to be somebody that is perceived to be a little bit more empathetic and
More empathetic to The Rock? Come on. Come on.
Okay, you can.
Look at all the stuff that he does.
Okay, I'm going to think about this one. Next episode, I'll have a good answer for you.
You'll have the next one. You'll have an update for me. We'll do that for the next episode that we tape of Drunk Real Estate.
There you go.
We'll do a poll at the end, and by that time, I will still say The Rock, and by that time, you can pick another one.
Perfect. Okay. Let's talk a little politics.
Okay.
Let's see. We'll try not to get too controversial, but let's see.
Let's go Republican Party then, because that's the easy one to talk about.
We can do both. But we'll start with the Republicans. I think the big question right now for the Republican 2024 ticket is Ron DeSantis going to throw his hat in the ring or not in 2023?
That's a tough one because first of all, it's kind of a lose-lose for the Republican Party if DeSantis goes up against Trump, because I feel like if DeSantis does go up against Trump and beats him, there's always that chance that Trump will just be like, I'm going to run as an independent, and would actually, he has the personality. I mean, they both have the personality that they would tank the election just for their own they're very strong-headed, strong-willed people. So I think there's that possibility. So it just depends on like how influential the rest of the party is on DeSantis, and I don't have that answer because I think he has the chance of beating Trump in a primary, which could be really bad for the Republicans.
Interesting. Yeah, I hadn't thought about it to that degree. I was just going to say yes, I think he will.
I mean, just look at how much he's progressed. Like when he first got elected, it was close.
Yeah,
Like he barely got elected, and then the last time, what do you have? Like
less than
70 some percent.
1%, over 20%.
Yeah, so like, so he's got a huge tailwind behind him,
Yeah.
and I think that's why Trump announced so early because he didn't want that to start building too much. He wanted to make sure his base kind of stayed loyal to him. So that's the most interesting, and I think when you talk about the Democrats, I think they're just waiting to see how that plays out.
Okay, well let's go over to the Democrats. What is so there was talk this morning that Biden is getting ready to announce a 2024 run again. Obviously, he's the incumbent, and it's his to lose. But there are a lot of Democrats talking about should he be the guy running, and will he be the guy running, and should there be somebody else? Who do you think? Who do you think by the end of 2023 it's going to look like is on the top of the Democratic ticket?
See, I see how this feels now because I was making you go first and everything else, and then you get to the hard political stuff and you flip it around on me. Um, no, as I said, I think they're waiting it out because I think it's a belief amongst the Democratic Party that Biden can beat Trump again, but they're not sure if Biden can beat DeSantis. And at this point, like I almost look like I mean Trump kind of flipped it on its head, but the president is just as much of a figurehead as anything. And so I don't think the Democrats really care. They just want to get somebody in that's a Democrat. So they're waiting to see how the other side plays out, and they're going to wait as long as possible. I think so. It's if Trump's running again, I think there's a very high likelihood we see Biden again. If DeSantis is the runs against him, I don't know. I don't know if I have a good candidate to go up against him.
Okay, I'm going to say, and I don't like it because I think there should be an age limit in not a legally regulated age limit, but I think that it should be universally agreed that at some point you're too old to be running for president of this country. And I think we should eliminate a number of people that are looking to run in both parties. But that said, I think Biden will want to run again in 2024, and I think he'll make that announcement, if not soon, certainly by the end of 2023.
Well, there you go.
Okay, I've got two more, and we can make them
Okay,
quick.
all right.
But
Let's add them.
I've got two more for you. Crypto. What's going to happen with crypto in
Ooh,
2023?
that's a good one. So yeah, that's a tough one because like it's such a first of all, I think some regulation's going to come down on crypto, especially the whole FTX thing, all of that. Like, there's going to be some regulation come down as far as what are crypto tokens. Should the SEC be paying attention to them as securities? I think Bitcoin they've already come out and said that Bitcoin is a commodity. It's not a security. But all of these other coins, like, I think they're at risk of being deemed securities, which could be a huge issue for them. If that happens, then I think Bitcoin's going to do quite well because if they're exempt and all these other coins aren't, then Bitcoin's going to do well. Otherwise, Bitcoin could keep sliding a little bit once we. Unfortunately, Bitcoin was touted as this like alternative asset, and it was separate from the market and all of these different things. But it started just tracking too much with the I'm blanking right now. What's the tech index? It started just tracking too much with the tech indexes on the stock market, and so I don't I don't see it, doing a huge run up or anything. As far as if you're just talking about tokens, that's my opinion on them. If you're talking about the whole crypto space, tokenization and stuff, I think that gets put off for a year because we're going to be dealing with, the FTX and all the regulations, and I think that's going to take more than a year to all shake out. So we're not going to see like syndications getting tokenized in 2023.
Okay, so Bitcoin right now, I just looked it up, is at about $16,600. What's a Bitcoin going to be worth a year from now?
I think it'll go down in the short term a little bit, but I do think I see it shoot up a bunch, and I think it'll be mid 20s. I hope it'll be mid 20s based on what I'm holding. But I don't think it's going to take off to 60 again. But I do think it's going to go down with some recession fears and possibly a recession. But I think it'll sneak back up into the 20s. So let's call it 25 by the end of the year.
Yeah, I definitely agree. You touched on FTX there a little bit. I think that's going to shake up the market. I think it's going to get the SEC to start investigating a number of these companies that are putting out coins. They want to avoid another FTX situation where literally billions of dollars were lost, and I think it was probably somewhat or will be an embarrassment for the SEC because they really should have. There was a lot of signs that there were issues with FTX and its associated hedge fund. Um, so I think that's going to hurt the industry. Now the question is, will, like you said, the rest of the industry getting hurt and more regulated, is that going to help Bitcoin? And I think that's an interesting argument. My original thought there was that Bitcoin was going to take a hit with the rest of the industry, but if it's the one coin that's pretty much exempt from SEC scrutiny, that could actually boost it. So I'm going to say lower than you. You say 25. We're currently at 16. I'm going to go with right where it is today. I'm going to go with 16,600. It's a wild guess. Nobody has any idea. Certainly I don't, but there's my guess. And then one more, last one.
Okay.
Let's end it on this one. So everybody's talking today about Elon Musk and Twitter. But I do want to put a quantitative thing here, that we can actually judge and see how we
Yeah, they're
did.
public. They're private now, so we have no insight into to how they're doing.
Exactly. But it turns out that Elon Musk is CEO of at least one other company that is public. So not Twitter, Tesla stock has dropped from a high back about a little over a year ago of just over 400 to now it's at 120 as of today. So presumably Elon's not going to be CEO of Twitter for very much longer, according to him, and that means he's probably going to go back and start focusing on Tesla again. So where's Tesla stock going to be in a year?
At least up 50%. Like it's now that I'm saying that, maybe I should put some money in it, but because I don't have any in it now. But I think, just the way the media is and how everyone's just jumping all over Elon with his handling of Twitter and stuff. And yes, he's more of the move fast and then kind of apologize for the mistakes you make, but he'd rather make those mistakes quickly than overcalculate and take a long time and spend a lot of money doing it. So yes, he's made mistakes, but I think he's actually going to be great for Twitter. He's going to be great for those investors. I wish we tried to. We talked about the one fund was investing in Twitter. We talked about putting money in it, and I wish we had, just to be, so we had been along for the ride. But that ship sailed, and we weren't able to. But I think he's got a great track record of building companies, and that's basically what he's doing with Twitter. He's bringing it down to a base startup tech company, and he's rebuilding the whole thing. And I think it's going to do great. And he's going to put in a CEO to put everyone's mind at ease that he's not taking too much time at Twitter. And Twitter's going to be super successful, and everyone's going to be like, okay, Elon's not crazy anymore, and it's going to start coming back up. So I say Tesla's up another 50% from where it is now.
Okay, puts it at 180. I'll put you down for 180. Yeah, definitely. Elon has taken his eye off the ball with Tesla and has kind of gone a little nuts, it seems to me, over the last few months. And so, assuming he returns focus to Tesla, I think certainly that's going to help the stock. But I think we also have to look at the fact that it's not just him that's impacting the stock. Certainly, there's been a lot of what he's done that's people are starting to get a little bit worried and probably selling off. But the economy's not helping either. With higher interest rates, that means that car loans are cost more, and so luxury cars, high end cars, and Tesla certainly is one. Given that its prices have come up about 20% over the last year and a half, it's impacting sales, and so. I think Tesla could be in for a tough year, assuming we don't see interest rates come down before the end of 2023. I do agree with you that when he comes back, there's probably a buying opportunity. So I like your number. I don't think we're getting anywhere close to that 400 number again where we were last November. But yeah, I could see us going us. I could see Tesla. I don't own any Tesla, so I shouldn't say us. But I could see Tesla going up another 50%. So I like your 180 number, and
Well,
I
so
hate.
here's my counterpoint to your demand is Tesla's American-made car, and America is starting 2023 has the new $7,500 tax credit for American-made cars for electric cars. So that's what I don't know if you noticed, but I do have a Tesla, and so I got the alert that they have a huge sale right now for like the last 2 weeks of the year. If you took delivery of a Tesla, they give you a $7,500 mark off your car. Because basically, I'm assuming in the last month or so of the year, everyone's like, well, why would I buy a car now if I just wait till January? I can get that $7,500 credit. So they were trying to incentivize people to do that. But do you think that's going to have enough of a boost in their electric car sales to offset any cooling demand?
I think I think Tesla's lost some shine over the last couple months, and I'm gonna put that squarely at the feet of Elon Musk, who basically came out as a little bit nuts, and I think that's going to turn off some buyers. I mean, there's this perception that people buying electric cars are liberals. I don't have any data there, but I mean, certainly you can't argue that liberals are more likely to buy electric vehicles than conservatives, and I think Elon Musk has pissed off a lot of liberals over the last few months, and so who knows? There are probably plenty of people out there who are perfectly happy not buying a Tesla now that they realize he's not who they thought he was. Same same other side of that coin is that probably a lot of conservatives who never even considered buying a Tesla because hey, it's an electric car, they now love Musk, and so maybe that's going to turn on a whole half the country like looking to buy Teslas. I honestly have no idea. I do agree with you. It's probably a buying opportunity, 120 though, and
Yeah.
so I'm going to go buy some Tesla today.
And there's one more. I mean, we're getting a little bit into the weeds now, but when you talk about Tesla's supercharging network, there was they're trying to figure out opening that up to other cars, which I absolutely hate because the only reason I bought a Tesla is I have to drive up to Canada, which I did 2 weeks ago, and it is the only way I can make it up here and only add an hour to my trip is by driving a Tesla because they have all their supercharging network. Now, if they open that up to other people, what's going to be the effect on people buying new cars if they don't have that advantage anymore? And also what's going to be the effect on, how much income are they going to generate from just these supercharging stations? I don't know the numbers on that, but I also know that a significant part of Tesla's income, everyone just looks at Tesla and says, oh, it's a car company that sells cars. Well, a significant portion of their income is the tax credits actually that they sell to other companies that need tax credits. So, the unfortunate thing these days with the stock market is people buy an emotion and sell on emotion, and I think that's happening a lot with Tesla. And I think fundamentally, as a car company, they still have a lot of upside. So, I would look at it as what's the Jim Craner buy buy buy.
There you go. So I'm going to go with let's see, what am I going to go with? You went with 180. I am going to go with 200 just so I can deviate from you a little bit. Though I think yours was a good guess there.
Okay, awesome. Any other outside major predictions for 2023? Aliens, we going to be visited by aliens 2023? Anything
I don't
else?
know. I don't know. Any big scandals you think? Anybody? Any unforeseen deaths? Any?
I
That's a
don't know.
little
I
morbid.
heard a vicious rumor on Instagram that Tom Brady and Giselle, they broke up because of the whole FTX thing. And if you look at the timeline, they went to the Bahamas during training camp to try and work out their marriage, which where's the headquarters for FTX? Bahamas. And then right after that, that's when the FTX scandal broke. So I don't know. Maybe we'll get light on that one.
I heard that he got some big award and didn't thank her. So yeah, maybe that's a thing.
Who knows? Who knows? All right, man. Well, this was a fun episode, by far our longest, so we'll probably end up breaking this into two parts. Um, Mainly, the first half is probably a little bit more beneficial. The second half is just us talking about random stuff. So, we appreciate anybody who actually listened to both of these episodes and made it through all the way. Thank you very much for that, and we will see you again next week.
Happy New Year, everybody.